welcome to BloombergQuint. We're joining here in this special broadcast for an interview with Mr. Keki Mistry, the Vice Chairman and Managing Director of HDFC Limited. The company has just reported its third quarter results, and well, there are a few clarifications that we probably will need from the management. So, Mr. Mistry, let me just quickly start. Firstly, welcome on the show, and let me quickly start with a question about the profitability of the company. Now, in your statement, you've given a few clarificatory points. If you could just detail why this year is not comparable to last year, sir.
Right. So I think the fundamental reason why this quarter is not comparable to the third quarter of last year, and this is, there's a lot of research which analysts have written on that, is because last year's third quarter, we saw the culmination of the merger of Guru into Bandhan, as a result of which, because we follow index accounting, we had to recognize a gain of 9,020 crores. So, the third quarter of last year had this extraordinary item of 9,020 crores of gain. So you need to eliminate that. So there are certain other items you need to eliminate. One is you need to eliminate the profit on sale of investments, because profit on sale of investments is never going to be consistent. You may sell more in one quarter, you may sell less in another quarter, and in the third quarter, you may sell nothing. So therefore, you have to eliminate that. Another thing you need to eliminate is the net gain on fair value. So under index accounting, other than for subsidiaries and associate companies, you are required to mark to market all your investments based on the closing price of the share or the closing value of that share at the end of the quarter. That can sometimes result in a gain, it can sometimes result in a loss. So again, this is not something which has got anything to do with operating performance. So you need to eliminate that. Then sale of loans. In one quarter, you can sell more loans, another quarter, you can sell less loans. So you need to eliminate that. And then this quarter, we had this exceptional, or this item called ESOP. We gave stock options to our employees. Under index accounting, we have to take a accounting hit to the P&L account every quarter. If we were following the earlier method of accounting based on what used to prevail prior to index, we would have had to take no hit in the P&L account. So you eliminate that, and then you eliminate the provisioning. So if you eliminate all these items, then the adjusted profit before tax would have been 3,694 crores for the quarter, compared to 2,908 crores in the third quarter of last year, which would then give you a 27% increase. But the biggest item which you need to eliminate is the Guru Bandhan merger, which resulted in the 9,000 crores of profit in the third quarter.
Okay.
Which is more an accounting thing.
Right. Let me also get in your commentary on the net interest income, which has shown about a 26% rise. That's on your base of loans. That's a significant jump in the NII. I just wanted to get a sense from you as to what this shows, firstly, on the demand side of the story, and whether this number is a sustainable growth number, 26%.
All right. So I think the primary reason why you saw the net interest income growth, the spreads have marginally gone up. It's not a significant change. It's marginally as they gone up. But the bigger reason was that in the first quarter of this year, when COVID happened, we decided that as a matter of prudence, we would keep a significantly higher level of liquidity in the balance sheet than what we historically were keeping. So right through the April, May, June period, the average level of liquidity we kept on a daily basis was about 32,000 crores. Now, this 32,000 crores brought with it a negative carry, because the return we got on investing that money in overnight instruments was lower than the cost of funds. In the second quarter, we became more comfortable with the general liquidity conditions in the market, and we lowered the level of excess liquidity, but still it was higher than what it historically used to be. And in the third quarter, we brought it down to a level of 16,800 crores, which is probably the level at which we would be fairly comfortable with a long-term view. So because the level of excess liquidity has been brought down, that excess liquidity amount is now getting a higher return than the overnight investment in liquid funds or overnight investments would have got us. That is contributing to the improvement in the net interest margin. So if you see
this is not
net interest margin for the 9-month period, it stands at 3.4%. If you had looked at it for the first quarter, April, May, June, it was only 3.1%.
Okay. So would you say then that in the coming quarters, this growth number would not be repeated then?
I mean, I don't want to No, so if we continue with the lower level of, I mean, the lower level of excess liquidity and everything else remains the same, then hopefully net interest margin should remain reasonably healthy. Let's put it that way.
Okay, sir. Quickly on the asset quality side of the story. Now, of course, there are plenty of dispensations that sort of muddle the asset quality picture. But if you just go by the pro forma number which you've given, which is including the Supreme Court asset clarification benefit, the gross NPA is about 1.91. Just trying to get a sense. There has been a jump in the individual loan as well as the non-individual book, as far as
yeah, it's a jump. It's not a jump as such. It's a marginal increase in the level of
sure.
non-performing loans. If you compare this with March, it's actually lower. So March 2020, the gross non-performing loan was 1.99%, and now it is 1.91%. So it's actually lower than what it was in March. But non-performing loan is a number. It depends on how whether the fellows, the individual or the customer, whoever it is, has paid the installment or time or delayed or whatever. What you really need to look at is whether we are adequately provided. So if you look at the level of provisioning we are carrying, as of 31st of December, we were carrying a provision of 12,342 crores of rupees. If we go strictly by the regulatory requirement of providing for non-performing loans based on the period of default, then the amount of provisioning that we would have needed to carry would have been much lower at about 6,579 crores, as against the 12,342 crores. So whether next quarter NPLs go up or down, I don't know. I don't think anyone can ever give you that number. But what I can tell you is that the provisioning is very, very adequate.
Okay.
It considers every possible conceivable stress that we could even theoretically see.
Sure. Just coming to the last couple of questions with respect to the results. The non-individual book growth is about 7% year on year. This was 13% in September. Is it just a year-on-year issue, or is there a general focus on bringing down that portion of the book?
I mean, we have said now for nearly 3 years now, since 2008, 2.5 years at least, that we will be a little cautious or a little slow in non-individual lending. So that is something which has continued right through this period of time. It was only in the first quarter of this financial year where we could not do individual loans because of the lockdown that the non-individual loan book increased. But that was really loans given to AAA corporates, some of which were short-term loans and some of which would have got paid back during this quarter. So we continue to remain cautious. It's not that there is no demand. There is sufficient demand in non-individual loans. We are cautious. We still remain cautious. But at some point of time, once we start seeing even greater buoyancy in the system, we would be, lift our foot off the brake or, press the accelerator or whatever. But it's a conscious decision at this moment to grow that at a slightly lower pace than the individual loans.
Since we are having this conversation a day after the budget, just wanted to get your views. I mean, there were certain specific announcements as far as the real estate sector is concerned. Affordable housing, tax breaks. There's also migrant labor specific projects. Trying to see, as a financier to the sector, is your outlook that this is going to, of course, push your the non-individual portion of it?
I think the important thing is that, first of all, to talk of the budget broadly rather than only on the housing sector, I think it's a great budget. I really genuinely believe it's a great budget because it is a growth-oriented budget. The good part is that the finance minister has not tried to keep the deficit at a certain level, and therefore to achieve that lower level of deficit, either reduced expenditure which was important to incur or imposed taxes which would have affected sentiments and slowed down demand and therefore had a negative impact on the economy. The finance minister has not done that. She's let the fiscal deficit go up a little bit in the short term, with clearly a goal that by 2026 we'll come back to the original targeted level of fiscal deficit. So I think, to me, that is the most important part of the budget. Right. Now, you don't, as far as real estate is concerned, there are various benefits which are there in the Income Tax Act. For example, the interest you pay on a housing loan is tax deductible to the extent of 2 lakh rupees a year. There is an additional deduction of 1.5 lakh rupees a year, provided the loan is approved before 31st March 2021, which has now got extended to 31st March 2022. Then there is a credit-linked subsidy scheme, which also has got extended by 1 more year, not in the budget, but prior to the budget. There is a deduction available for principal repayment of housing loans. So there is a fair amount of incentives that have been provided in the tax laws for housing. And really, for a person buying a house, the most important factor he has to look at is affordability. And we've not seen property prices rise in the last 4 years. If anything, we've seen property prices come down. Income levels have generally gone up during that period. So interest rates are at the lowest ever. Cost of registering a house has come down in several states. So in terms of affordability for a customer, it's never been better than now. And I think a lot of people realize that property prices cannot or will not or are unlikely to go down much from these levels. And therefore, if you are to buy a house, this is the best time to buy a house. I said this even 6 months ago in several programs.
Right.
And I continue to say that.
Right, sir. One of the other proposals or announcements in the budget were with respect to the FDI and insurance. Now, as far as your insurance venture is concerned, is there any talk of raising foreign partner stakes there?
No, so we have two insurance companies. We have HDFC Life and we have Verco. HDFC Life, Standard Life are our partners. They used to have 35% equity. So they were never even at the 49%, which was prescribed earlier. And they have slowly brought down their stake from 35% to below 20%. So I don't think they would look at increasing the stake. In the general insurance business, we need to talk to a partner and then see what they have. It's too early to do that. The budget just came in yesterday.
All right, sir. Thank you so much for joining us on this conversation.
Thank you. Bye-bye. Bye.